Alright, ICT traders, welcome back to the channel, and in this video we're going to do some advanced ICT stuff. I know this is going to be totally new to a lot of you people, but then this is one of the most powerful lessons on ICT concepts that you need to know, because I'm going to show you the reasons why some seasons of the year your trades are never going to go in the right direction, or they are never going to go according to your plans. All right, so it is called the ICT quarterly shift theory, and it is a bit advanced stuff. I want to show you how to hack the price algorithm using this ICT concept. So from the word, when you hear about quarterly shift theory, in a year we have basically 12 months, right? In a calendar of the year we have 12 months. So we're going to break this into fractal. Now price behaves in fractal. What that means is that what is happening in a yearly time frame can be seen in a monthly time frame, and it can be seen in a weekly time frame. So as you keep breaking it down into crunches, that is basically what that means. So the quarterly shift, we're going to divide it into three months of price action, and then look at what that data is doing and how the algorithm behaves every three months. All right, so let me show you how to go about that. Now, to quickly show you what I meant by that is, let me show you this. I have a delineation of the chart. This is the dollar index. You can do it on any assets, all right, on any asset. So this is the dollar index. Now I decided to put a vertical line across the dollar index on the weekly time frame. You can do it in the daily time frame, but what you need is to have every 3 months delineated with this vertical line. To easily do it, I can just show you a shortcut to do it. Let me show you. There is no a particular indicator on TradingView for delineating these vertical lines, but then how I normally do it is to pick, you know, this called data range. If you want to get it, you can come, I think this is where it is. You can come right here and you scroll down. This is it. It's called data range, and then you can tick it as your favorite. Now once you pick your data range, if you put it right here, you can do move back to at least 90 days. You can see on my bar this is 91 days or thereabout, 90 to 91 days. That is 3 months of data. That is 3 months of data. You can do the same thing after picking it from here to the next level, 91 days, and put your vertical line. 91 days, put your vertical line. So that is the easiest way to get your 3 months delineation. And then another thing you need to know is the fact that this simple concept works with your popular AMD concept. AMD concept. Now look at this. You remember your accumulation, manipulation, and distribution concept, what price normally do in a typical algorithm. The algorithm behaves in this way. You will see price accumulating and then distributing, and you either see a continuation or a reversal. So that is what price does on a typical chart. So this simple concept works in that similitude. So you have accumulation, manipulation, distribution, and then continuation or reversal after every three months in a year. Now you can do this in a yearly calendar. You can do it on a daily time frame. You can do it in a weekly calendar. So that is where ICT got that concept of trading on Mondays is normally difficult for him, because Mondays are normally accumulation hours for the market. Throughout Mondays, most of the Mondays, you will discover that the market is just accumulating, and then Tuesday you begin to see some, manipulation across the week, and then you'll be able to see it. Anyway, I will show you everything in regards to that, but then let me just take out these guys and then we start this thing properly. So let me show you the details of everything I have delineated for you. So Let's go back to the past data and see how true this concept is. All right, I'm taking it back to, this is, which year is this? This is 2012. Now look at how this price action behaves time and again and again and again and again. Look at this. Can you see that this is an accumulation phase for the market? Let me show you. Is it not the same accumulation we are watching time and again? Accumulation, let me adjust it properly. Accumulation. This is normally like your accumulation that you mostly see. Accumulation is also known as what we call consolidation or a range. This is a range right here. Accumulation, and then the next 3 months will give you the manipulation. So the next time you're coming to trade, you should know which of these quarter you are. If you are in a quarter that deals with manipulation, you should be careful. If you are in a quarter that deals with accumulation, then you should be careful. So the next 3 months is coming with, look at this. Manipulation will be found in the next 3 months, and distribution starts across all through to this area. All right, and then this is it. Reversal coming in back to this area. Reversal coming in, because this X is known as the reversal or continuation. It either continues or it reverses. The next one, we have it again. It repeats itself. It's a circle. You have accumulation right here in these first 3 months, and then you have manipulation. Look at this. Manipulation targets liquidity. Manipulation targets liquidity. Don't forget, that is the goal of a manipulation, and that is what we call Judas swing. It manipulates, that is targeting the liquidity below this area, and it distributes from here all through to this level and continuous movement to this area. Continuation, accumulation, manipulation happening to the upside. Look at this. Manipulation taking out liquidity across this area, and what do you see? Distributing to this area. All right, your X again. You have either a reversal or continuation. You have accumulation again in this area, price accumulating. All right, you will see this is where, look at this. The manipulation did not come in these first 3 months, but it doesn't matter. You can actually see manipulation and then distribution coming in to continuation to that area. So this is what ICT meant by the quarterly shift. After every 3 months, you must see that shift. Accumulation happening, manipulation coming in. The manipulation did not come in here, but it came in right here, distributed down to this area, and then it starts again. Time and again, you will see this. You see accumulation, manipulation, and distribution. You see reversal, accumulation, manipulation. What does manipulation do? It targets liquidity. It targets liquidity, and then it distributes. The same thing happens. Accumulation right here. It accumulates, it manipulates, targets liquidity, and then you see distribution coming through this area time and again. All right, are we getting all the concept? So when you go through your chart, just do it across any chart at all. You will see what I am saying. You will see what I am saying. So let's check the most recent data. Look at this happening here. What do we have? Do we consider this area? We consider this is continuation, and look at this. Some of this area, the accumulation starts from here, manipulated it down here, distributing through this area, and it continues the movement here. And then what do we have right here? Accumulation, and we are out of accumulation month. What do you have? You are expecting price to manipulate. So over the next few months, we will either have a manipulation to the downside and we have somewhere to move there, or we will have a manipulation here and it comes down. So this is for the monthly. What if we can do this same thing in the daily time frame and we can do it on the hourly chart? All right, so let me show you that. Just an example. Everything I'm showing you right here is an example of what can happen on your chart time and again and again. So let's drop down. Let me delete everything drawings. So if I go back to the daily time frame, going back to the daily time frame. So let's see what we have. Let's see what we have. All right. So every 5 days you have 1 week. So if I drop down to the 4-hour time frame or any time frame lower, you're going to see what happens. Let me find Mondays. Mondays, you hardly see price doing anything serious. The same principles operate with this. Let me go back to Mondays here. What do we have? Monday around here, right here. Let me show you that. Monday, you will have price through Tuesday here, somewhere around here. All right, somewhere around here. This is where your Tuesday is. So look at what price did on Mondays from the 4-hour time frame. Did you see any serious price action? Look at what Monday did. Just in one place, accumulating. And what do you have? You have manipulation coming in on Tuesday. And then just look at this area where my line is. And then you have distribution over the week. The same thing repeating itself time and again. Monday again here. Monday around here. Where do we have Monday? So this was Monday, and you can see Tuesday distributing. So every time you see Mondays are not safe for trade, because that is the day that there is inactivity accumulation happening most of the time, and that is why ICT doesn't advise that. So you see, this is Mondays, and then Tuesdays you begin to see the movement. All these things happening in a week. All right, so this is the reason why you see these things happening. The same concept, the quarterly shift can be broken down into smaller chunks. And then lastly, let's do the daily on and see. So the daily one will just drop down to the 15-minute time frame, just the 15-minute time frame, and you will see if you can break down the daily time frame into six hours in a day, you will have just 4 quarters in a day. All right, you have just 4 quarters. So to easily get that, if I go to settings and come to events, session breaks, all right, I hope you're understanding what I'm teaching you here. So in a particular day, let me take a typical day and show you. All right, let me go to a currency pair, Euro USD. You can do this across any asset you're trading, whether futures indices or you're trading normal price action. So let's look at this. This is the 15-minute time frame. The same concept applies across all of it. The first 6 hours of the day of a typical and active trading day comes as an accumulation. Look at this area. The first 6 hours of the day is always an accumulation, the first 6 hours. So if you are bringing your strategy, you must be able to know what is happening the first 6 hours of the day, and that is the Asian session. And then the next 6 hours, that is where you will have the manipulation. You see price pushing. And what is the purpose of manipulation? To sweep liquidity. The purpose of manipulation is to target liquidity, and this is exactly what this did. It targets that liquidity above that area. Let's see what I'm doing there. What am I doing? So it targets liquidity, just liquidity. Every time you see price does that is because it is targeting liquidity above a particular area, and that is the second quarter of the day. And boom, look at this. After targeting liquidity, shifting structure, return back toward to a fair value gap here at this point. This even happened recently, and then boom, price going lower. The same thing happening in the following day. Accumulation, look at this, accumulation, manipulation, distribution, the second quarter, third quarter. And that is where ICT came up with the kill zone theory you were trading. All right, so understanding this, you will not be trading haphazardly. You will not be trading haphazardly. The first 6 hours, you see accumulation, manipulation, distribution. The same thing that is happening every quarter of the year is what you will see across smaller time frames. All right, guys, so this is just for me to show you what is happening in the market. And currently, if you check the weekly time frame for our quarterly shift on this is Euro USD. What do you think we have now? We are getting into a phase of manipulation. So the market currently is going to show you some sign of difficulty to predict the buyers, but then you know exactly what is happening in this quarter. With the information I shared with you, you can do it across any asset you're trading so that you will trade with an understanding of what is happening. All right, guys, I'll be stopping this video here. Make sure you subscribe and turn the bell notification. If you have any question, let me know in the comments. See you in another video.